All right, guys, I'm going to do an end of the day wrap up on the stock market, cover what actually happened today. Because we're in the middle of earnings season, I think it's important to keep keep everything on point, keep our wits sharp about what's going on, so that we're able to take advantage of any major movements that are going to take place. It's very possible that we're at the top of this bear market rally, or this rally, whatever you want to call it. If you think it's not in a bear market, fine. If you think this is a bull market, that's fine. But what the point that I'm trying to make is, it's very possible that we're at the top of this rally that's taken place. And so I want to point that out. I want to show you what I'm seeing, and then show you what I'm going to continue to look for to verify the price action. Okay, guys, you know the drill. Give me a thumbs up. Here we go. Qs here is the thing that I see on the Qs right now is a couple things. And we need a little more follow through, but here's the thing. Bearish engulfing the other day, and we're looking at a daily chart, so trying to cover some of the bigger picture things. This is your bearish engulfing, and this was also the outside day. So I pointed that out, but we didn't get, we didn't get confirmation, all right? We didn't get follow through. There should have been another red candle to give you that nice confirmation of a sell signal. We didn't get that. Instead, what we got was sideways action, and then they did this rally right here that, in hindsight, looks like it was designed to shake out anybody who was short, who took this sell signal right here. And again, I always point that out. Whenever you get a clear sell signal, always look for the counter move. It almost always happens where they'll throw some counter move out. The market makers, want to shake out any weak hands who take sell signals. Everybody who's charting and doing technical analysis can see the sell signal. And so the market makers come in and try to, use their weight, throw their weight around, shake people out, and, maybe they're taking positions on the shakeout. You don't know. So that's what it looks like. What this was designed to do was a shakeout move. And we started to run higher, but couldn't close higher. And now you can see where we're at. We're getting follow through selling. So bigger picture, still need to break the uptrend right here. Haven't done that, but that could come quickly. So we're going to go ahead and watch this, and I'll go through the FAAMGs, because the FAAMGs are what is going to move this market. The reason why the market went down today is because Microsoft missed its earnings, or for whatever reason, the market sold Microsoft. And that's why the market went down. It doesn't have to do with anything else that you'll read on headlines. It literally only has to do with the large, heavily weighted, mega cap stock Microsoft, and that being sold, and then weakness in some of the other FAAMGs. That's why the market went down. They'll find a headline to slap on it, but the reality is it's just technically induced. It's people are taking profit. And that's what it looks like. SPY. All right, so SPY, there's something going on here that's really interesting. If we get more selling tomorrow, then what it looks like this was right here was a false breakout, a false move higher. And I'll narrow it down to the hourly to show you guys what I'm seeing. So this is your island top reversal. We've been looking at this for quite a while now, since the beginning of June, so going on 2 months. And you had the sell signal, nice clean sell signal. It was very, a good sell signal. But then we traded sideways, and again, this looks like the counter move that, pretty much shook it. It negated the sell signal essentially. So anybody who took the sell signal, was basically, looks like they were tricked into thinking that sell signal doesn't count anymore because it was negated. And then the market started to break out. It started to break above the sell signal right here at 323.19 and started to break higher. And it also broke into the gap at 326. So if I zoom out, the gap I'm talking about goes back to the big sell-off when it started in late February. It started with a big gap down. I remember exactly. I think it was a Monday, and all of a sudden the market was down 1,000 points out of nowhere, and that was the trap. We started to, this is the gap that we created. Well, going back to here, we started to move up into the gap. And so you move up into the gap, you've negated the sell signal, and at that moment, everything is bullish. I mean, you see, everything is bullish. You should fill the gap, at least a run up to 332. So that's still possible that we do that, fill the gap. But if we get more selling tomorrow, that means this was a false breakout. And I pointed that out in a video, and this is the point that I'm trying to make. I continue to try to make. If you get a breakout, and this is the daily chart, here's where we broke out back here on the 21st. And I pointed it out that day. I said, look, we broke out here, but there's no volume. The volume is completely anemic. If I scroll out, you can see, look at the volume. And it's not the fact that you can't move higher on low volume. It's the fact that we were breaking into this gap, this well-watched gap, this well-watched level, and there was nobody participating in the bullish move. There was, very few participating. That is the point I'm trying to make. When you have a breakout into a major level and you don't see the volume, you have a high probability that that move will be faded or will fail. And sure enough, today we got the failure. And we actually closed, you can see we closed 322.88 below the island top reversal right there at 323.30, 323.40. So if we get a nice impulsive day tomorrow down or gap down potentially, then this was a false breakout. It was in the charts because we didn't get the volume confirming the breakout. And that's why I said there's a very high probability that this fails, and there's the failure. So that's the point that I want to make. Now, if we do get a big move down, then we'll probably gap fill right down around here, which is going to be roughly 312, somewhere right in there. So we'll watch that. Okay. And we need to watch the FAAMGs because FAAMGs are going to, they lead the market up and they can bring the market down. So, and they're reporting. We just got Microsoft and we're getting the rest of the FAAMGs are going to be reporting soon. So next week, I believe a couple, Amazon and Apple report next week. So we're going to know where this market wants to go, and it's probably going to set the next trend, the next, bigger size trend, not just a daily move or a few hourly move, but the next trend. So that is going to be something that we need to stay on top of. Here's what we got going on in Microsoft, and I'll narrow it down to the hourly chart. All right. So hourly, we broke down. All right. We're below support right here. So I have the trend line. We have lots of reactions verifying this trend line. You can see we were just walking the trend line there. Today, impulsive selling, and we broke down. So if they don't recover this, if they can't recover Microsoft and bounce it back up, then look for more selling. And that's weak basically. Apple started to break down the other day, and I pointed this out. I said, look, if we've broken down, if they can't recover Apple, we're going to drift sideways and go down, and we're either going to have a kickback rally on earnings or we're just going to sell off more on earnings. But ultimately, we broke trend. I said everything is bearish. It doesn't matter if we have a kickback rally; it still should be shorted at resistance. And if we sell off, obviously it's bearish. So basically, the fact that we broke the support line, it was in a bearish posture, and now we get the down move. Apple's down 4.5% today, so that's a pretty good size move. You can see that, nice impulsive selling day, and, ultimately wiped out, counted up about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 13 days or two, roughly 2 or 3 trading weeks were wiped out just today. So now we look for, there's probably going to be some sort of a counter bounce. They like to bounce after big days like that. And then, maybe we move lower. But ultimately, so we could chop sideways a little bit more. Maybe we get a counter move up, then we roll over. I don't know, or we just gap down. So we have to watch that. But Apple is bearish. It has broken its support line. Microsoft is bearish. It has broken its support line. Here's Amazon. Amazon hasn't broken its major support line. It's coming down to it. So we'll see. Maybe there's more selling tomorrow and Amazon tags its support line before earnings next week. We'll have to watch that. But Amazon hasn't broken yet, but looks pretty weak because Amazon has an outside day, a big reversal candle right here. This is your big outside day candle with confirmed selling, kickback rally, continuing selling. So the next sell signal or big sell signal would be a break of this trend line. And then there's Google. Google did have a head and shoulders pattern, but that was negated right here along with that island top reversal. Could be a double top. All right, this does look like a potential double top where you've got the top here, a top here, and then we need to break the neckline. So still above support, 1485. Next sell signal would come on a break of the neckline. The dollar saw a little bit of recovery today, and that's what I was looking for. I kept saying in my earlier video, the dollar really should start recovering here. If it doesn't, there's going to be some big problems. So we saw the dollar recover, and I pointed out I think the dollar was going to recover, and that was going to come with a sell-off in the market, and that's exactly what we got. So called that one. The way I traded this today was with Dust, which is I thought it was 3 times, but I guess they changed it to 2 times leverage, bearish the gold miners, and that's how I traded it. This thing exploded higher. I saw it starting to move, and so I caught this big move right here, most of it. Didn't catch it all, but I caught most of it. Sold into the strength and went home with no position. So we'll watch this, but I wanted to go ahead and take that first initial move. And the dollar might actually find some strength if there's going to be continued selling. If you go to the daily here, wanted to see, didn't quite get, we did. An outside day, bullish outside day right here where we traded lower and we basically opened lower and then we traded, we didn't open lower, sorry. We traded lower and traded higher, closed just barely above. Not the best outside day, so we're not going to watch that as an outside day, but I need to see, ultimately what I'm looking for is the dollar to recover that support line that I was pointing out going back here. This green line, the dollar should recover this. So maybe there's a gap down in the market and a gap up in the dollar tomorrow at the open, and that might recover the dollar above support, and then maybe there's a move to the long side in the dollar. So got to watch that. That will be bearish for gold, and that will most likely come with a flight to safety in the dollar. Here's Netflix, and then I'm going to wrap up. Netflix, here's your trend line coming off the March lows, and nice uptrend line, lots of reactions. This looks like the blow off top where the stock just went parabolic, and we have now, as you can see, closed below the trend. Now, yes, we have moved below the trend in the past. You can see right here we dipped below it. But the difference is when I rolled to the daily chart, you can see that this is your daily, and you can see lots of reactions along the day. None of those actually closed below except for today. So every dip below on the trend line was intraday price action, but nothing closed below. And today clearly closed below the daily chart. So the daily support. So this is broken support. Netflix looks like it's going to continue going down. That's all I got, guys. There's lots of signs I'm seeing for bearish action. Again, I've continued to believe that this is a bear market rally. I think we are in a bear market. I think we're going to see continued price action to the downside over time. It takes time to work itself out, but when the market comes to the realization that we are in a bear market, that's when you see the big moves to the downside. And typically you want to be positioned for it before that actually happens. If you wait to get positioned after or while that's happening, a lot of the time you miss a lot of the gains or you're kind of too late. So you want to look for these signs early. We want to look and continue to read the market day by day to see what signs, see what the market's telling us, so that we're able to take up our positions before the masses realize it. And that's what technical analysis helps us do. Where everyone else chases price, we look for the leading indicators that tell us what the next move is going to be. So That's what this channel's about. Leave me a thumbs up. I do appreciate it. I'll catch you guys on the next video.